Last Friday, Moody's lowered the U.S. credit rating. It's a big deal since our country has not had its credit rating slashed since 1919. Shocking as it is, it got us wondering, what does that mean for you and for your wallet? So today, we're asking financial educator Derrick Kinney to answer that and so much more. Good morning, Derrick.
Good morning, Aaron. Great to see you.
So good to see you. Okay, so let's talk about it, because honestly, when I heard Moody's for the first time, I had no idea what it was. So tell me what we're talking about when we say that, and why does it matter so much?
Well, it's not a state of mind, because bad credit could lead you to feel kind of moody, right?
Moody.
You know, basically Moody's is a credit evaluation service that basically says you either have good credit or not good credit, and if you don't have good credit, there might be some penalties to face. So for a country like the U.S. to be downgraded is a big newsworthy item. We all want to have good credit, but we want the country we live in to have good credit as well.
Exactly. Okay, so let's break down what our score was, where it is now, and then what the new score means.
Yeah, so there's 3 different rating agencies available, and Moody's was the last one to downgrade the U.S. They're very, very conservative. And so typically the highest is AAA. That's like the premier, best credit. And what they did is they took it down one little baby notch to AA1. Okay. So it's still good credit. We're not going to file bankruptcy as a country. But what it does is it raises an alarm bell, because what they said was, listen, there's too much federal debt. It's not even a tariff issue, it's a federal debt issue, and they're worried about, can we pay back all the debts that we owe? Just like you and I, people want to make sure we can pay our house payment. They want to make sure our country can pay its debts as well.
Okay, so basically maybe this has been happening over time at this point then, since it's kind of an accumulation of debt, and you think that's what caused the slip in the first place?
Yeah, that's the main thing, and this wasn't unexpected. Keep in mind, other companies have done this before, the rating agencies, but when we see right now, especially worries about tariffs and the economy, worries about inflation, there's a lot of uncertainty. People feel nervous, anxious, worried right now more than ever.
Right.
And so to see this news, it sort of adds one more thing to the fire. So that does cause a lot of worry and issues for people right now.
Yeah, and people are worried. That is so true. And so tell me, what are the final implications? Because I think that's what people are really worried about, is how it affects their wallet. So what are the financial implications of these?
You're going to pay more in interest.
Okay.
So if you're about to buy a house, right now the average 30-year mortgage rate is about 6.92%. That'll probably go above 7%. If you're about to buy a car or even take out a new credit card, interest rates go higher. So the bottom line is, when people are worried about your credit rating, they charge you more interest because they're taking more risk to loan you money.
Got it.
And so with the country having a lower credit score, other companies may charge higher interest because the worry is, can they pay it back? So unfortunately, it's going to cost people more money. Again, it's not going to be a deal breaker. Always buy the best house you can, buy the affordable car, pay off your credit cards every month. But if you don't and you keep payments going, you're going to pay more interest.
Okay, so keeping that in mind, since you're already kind of giving us a few tips, what are 3 things that we should do with our money right now, between tariffs and inflation and now this on top of it? We really have to be protective of our money right now.
Well, we do. And what I would tell people is, number one, we're about the midway through the year. Set goals. Determine what goals you want to achieve financially. I always like to say, don't worry about other people's goals, focus on your goals.
Yes.
And also realize the White House is not coming to rescue you. Ultimately, what happens in your house is the most important thing, not what happens in the White House.
That makes sense.
And so you've got to know, are these required expenses? Are they things I just want to do? And can I cut back right now? But also find ways in your current job to make more money. No longer think of yourself as just the title on a business card. Ask yourself this question: what problem do I solve for people? And when you're a problem solver and you make more profits for the company, they're going to pay you more money.
Yes, indeed. Okay, that's a really good tip indeed, because I think sometimes we are at odds with ourselves. Do I move on to the next job? What do I do in this space right now? How do I make more money? It can be very frustrating. And so having that tip is actually a really good one indeed. Now, what are the odds? I know you said we're not going to file bankruptcy. We're okay. Tell me about a recession. Should we be worried about that?
We should be worried about a recession because there's a lot of uncertainty. One thing with the tariffs is it has interjected a lot of worry and anxiety into the economy. And here's why that matters, Aaron. The Federal Reserve wants to cut interest rates, but if tariffs cause inflation to rise, they will not cut interest rates. So if inflation drops, they cut interest rates to spur the economy on. So that's the worry right now on Wall Street, and why we've seen the market be like a seesaw. one day it's way high, one day it's way low. We're likely going to see that for the near future.
Now, people will usually start moving their money around when they get nervous about their keeping their money close to them. And so would you say that's a good tip to abide by?
Well, what I wouldn't do right now is move anything out just
Okay.
because you're losing sleep at night or worried, anxious. Unless it's affecting your relationships, then maybe take some risk off the table. But right now, keep adding money to the 401k, keep adding money systematically, because one month you're buying high, one month you're buying low. The key is when things do come back around, you've got seeds in the ground, so when those flowers start to bloom, you're making money.
There you
That's the
go.
goal.
That's what we all want to hear.
That's
Those
right,
are
that's right.
very good tips today and wonderful information as always. Derrick, thank you so much for being here.
Thank you, Aaron.